Mark Zuckerberg recently warned investors that there are tough years ahead. This is particularly as Apple's privacy changes on tracking users and an economic slowdown are squeezing the company's advertising business. And the company is making a couple of transitions. The first of them is to short form video. You obviously know that. This is to head of the threat from TikTok. And this involves turning away from some of the things that made Facebook a success in the first place. Its emphasis on social networking around users' self-generated content, underpinned by the social graph of personal connections it was uniquely positioned to understand. The new video service Reels is accelerating an important shift at Meta towards content from clever creators. And in place of the social connections and communications that determined what people saw on its services, Zuckerberg talks about the power of the algorithm. About 15% of the content on Facebook and Instagram is already selected from outside a user's personal network, a proportion that Zuckerberg predicted will double by the end of next year, 2023. Asked whether Meta was giving up on the main modes in its business as it turns to algorithmic recommendations, Zuckerberg sounded almost dismissive. According to him, anyone with access to a mobile phone address book can replicate much of a user's social graph, meaning that Meta has not possessed anything special in this department for a long time. Sustainable advantage only comes from mastering new technologies such as artificial intelligence faster than the competition, according to him as well. So the good news for Meta is that Reels is at least starting to catch on, with time spent on the service up 30% and advertising reaching an annualized rate of $1 billion. But it is also drawing users' attention away from Meta's other more profitable services. Zuckerberg's second attempted transition requires an even more fundamental overhaul. The planned move to the Metaverse will require deep changes in the way Meta goes about its business. Facebook succeeded as a walled garden, delivered advertising to users. Facebook succeeded as a walled garden that delivered advertising to users who were kept captive inside its own service. By contrast, Zuckerberg claims that the Metaverse, his company, will run that in the Metaverse, his company will run an open platform for outside developers, letting users move freely between different online worlds. It will also need its own industry-leading hardware and operating system. But we are reminded by the author of this piece I'm reading, Richard Waters, that 8 years after Facebook bought virtual reality company Oculus, the VR market remains a niche business. Meanwhile, its plans for augmented reality glasses that might appeal to a wide audience are years away. A headset from Apple, which has been unrivaled in creating digital objects of consumer desire, could leave Meta as an also-ran. In trying to convince the world he can build one of the Metaverse's leading open platforms, meanwhile, Zuckerberg faces a deep trust problem. Sporadic attempts in the past to create a developer platform at Facebook have failed to take off, and the company has always fallen back on the walled garden of its own services, leaving other developers in the cold. One sign of the challenge that lie ahead was the lawsuit the US Federal Trade Commission filed this last 2 weeks to block Meta's acquisition of a VR fitness app called Supernatural. Regardless of the merits of the case, it touches on what, for Meta, is a deeply sensitive issue. Will it give other developers a chance to build a large audience on its platform, or will it seek to dominate important activities in the new world, like fitness, with its own applications? So, and coming to the investment thesis we have been looking at from Argus, they are saying that they are maintaining their hold rating on Meta. The macroeconomic and business issues impeding revenue growth at Meta have forced a new discipline on management, as it rethinks its ambitious investment plans. Management now expects to cut a whopping $3 billion from operating expenses in the second half of this year, 2022. They think that Meta will focus on projects that can be monetized more quickly, including the use of artificial intelligence to improve advertising targeting, which has been diminished by the change in Apple's privacy policy and its TikTok like Reels streaming service. They will be looking for traction on these projects before considering an upgrade. The Metaverse may just have to wait. Okay, so that's what they're saying, and their long-term rating is a buy for Meta. So moving back, we can see what happened technically to the stock. We can see that there was an attempt for a long time, for at least they hope pretty much for very much for the best part of this year, 2022. It was trading up above $180. There was just one occasion when it closed below $180. That was in end of April, but as of early to mid June, it plunged below that and has not returned. Yes, only on one occasion did it close above 180. Only on two occasions it closed above $180, but since that time it has continued to trade below $180. This is a confirmation that amongst other things, a new trend is in play for the stock. So we can see this. You can clearly see here that the stock is definitely consolidating, and that is what is going on here. It appears to be consolidating within a longer term downtrend. Shares are presently below the 200-day moving average, and I think as well below the 50-day moving average. Yes, below the 200-day moving average and the 50-day moving average on its daily chart. Okay, so which is they are all okay. Yeah, okay. However, the average directional index is below 20, indicating that the shares have exhibited sideways movement recently. It's also lagging the S&P 500, but momentum is strongly bullish at the moment. The 14-period slow stochastic oscillator is rising as investors pay high prices for Meta shares. So there's an accumulation going on with the stock at the moment. So unbalanced volume indicator shows that longer term accumulation has given way to near term selling pressure by traders. So that is in contrast with what I just mentioned. But even though currently this is the unbalanced volume indicator over the last 10 trading sessions, it is has given way to near term selling pressure, but over the last 50-day trading session it seems to be a bit more of the case. You can see that. Yes, still you can see that. Oh, it's pretty much in accumulation, even though it is not the best it has been now. So if Meta is able to pull off a lot of things it's doing now, especially in the short term, according to what these guys are pointing out, try to focus on Reels and the core areas of its business they can be quickly monetized. I think we think it can always reach $194. $194 is easily something it can easily achieve in just one trading session, or just a few trading sessions. So we have a target of $194.31. That's around where it is now, but still below its 200-day moving average, but definitely above its 50-day moving average. So see what you make of Meta stock, Facebook stock, and thank you very much for watching this video.